We want to welcome our presenter today, Karina Lucid, who is a bankruptcy attorney with Lucid Law, and they're debt relief attorneys located in Bridgewater. And Karina's email is listed here, and she has that listed other places as well. We want to thank Karina for graciously volunteering to do this today. Her presentation is packed with information, so I'm going to stop sharing and invite Karina to present and share her screen.
Good morning, everyone. Thank you so much for joining us for today's webinar. Why is business credit so important? And I just want to start by saying that, as a bankruptcy attorney, the credit score question is always, I'm not saying most of the time, every single time I talk to a prospective client, I get the question of, how is this going to affect my credit? And so, that is what really made me delve into learning about how to improve credit and build credit, because it's a service that I felt was really important to provide to my clients. And so now I am very, very happy to share some of that knowledge with you. I will say that I kind of had to cut myself short, because even just what I put into the PowerPoint slides that I'm sharing with you all today, there's so much more to talk about in this arena. This easily could have been a 3 or 4 hour presentation. So just so you know, we're going to cover what I think are like some of the really key points about, building your personal credit, establishing business credit, and, why those things are interrelated and so important for you. The one thing that I have to say, what made me really think about establishing business credit is because even though you just got started in business, no one is going to give you credit without a personal guarantee. And in order to really build your business effectively and, judgment proof, if you will, from a personal perspective, to not put your personal assets at risk, you have to learn how to build your business to the point where you can get credit without a personal guarantee. Okay, so first you have to establish, some basis for getting, personal lending. That is an important component. It can be done without that, but that's like an advanced class. Okay, so you've opened a new business venture, and your business needs access to credit. The thing that I always tell people is, sometimes people say, well, I have a service business. I don't need, any more credit than I can just get with my personal credit score. Maybe I just need like a company truck to get me from here to there to do repairs on site. And I have like my tool chest and I don't need anything else. I don't sell widgets. I don't need inventory. So people think, they don't need to build business credit. But as your business grows, and hopefully you're looking at long-term having a, sustainable, thriving, healthy business, that will at some point require taking on additional risks, additional investments, whether that be a location where you work out of other than your home, whether that be staffing needs, any things like that. You're eventually going to need some kind of additional credit. And so the thing we're going to start with is credit score basics. We're going to talk about how to just, build your own personal credit score to make it healthy. And then we're going to go to the next level, which is establishing and utilizing business credit. And we're going to talk about increasing your credit and investment potential. And we're going to talk about, obviously, like I said, how to establish business credit. So first, we're going to talk about where does the credit score come from, right? It comes from, certain factors in your comprehensive credit report. So when you are going to seek a line of credit, a credit card, anything like that, the lender is going to look at your credit report Your comprehensive credit report, it identifies the actual number that everybody is, so covetous of getting a good number. And then it also reflects the total balance on all of your revolving and installment accounts. And we're going to talk a little bit more in depth about what that means. Revolving versus installment accounts is a very important distinction in this realm, but we'll talk about it later. So then the credit report breaks down the different types of debt that you have. It's going to show specifically student loans, car loans, mortgage, credit cards, medical bills. Okay. They're all distinctly listed. Now, how do we get to that number, right? Everybody wants that 720 or that 790, do we want to be excellent or do we want to at least be very good? Whatever it is that you're really looking for. That credit score number gets calculated by looking at certain very specific components. So the credit bureaus are going to look at your payment history, the amounts that you owe, the length of your credit history, new credit, and the different types of credit. That's what the credit mix means, okay? So first, let's talk about your payment history. Payment history makes up 35% of your credit score. So clearly, it is the most important factor in your credit score. It reflects whether you've paid past credit accounts on time. And you always need to bear in mind that paying your bills consistently and on time will increase your score. Missing payments or making late payments hurts your score. And I just want to, sort of like break that down a little bit more, even because I have my clients a lot of times that, in order to try and keep their credit score strong, they are, just always making those minimum payments. And that will work for a period of time. I'm going to get into a little bit later where that becomes problematic. But as far as that payment history, that's absolutely key up front is make your payments on time. So then the amounts owed. Amounts owed makes up 30% of your credit score. Okay. The amounts owed is the total amount of credit and loans that you are using compared to your total credit limit. And this little phrase that I have as a parenthetical is actually one of the most important things that you will learn today if you don't already know it. That is called your credit utilization rate. Your available credit compared to your use of credit or your amounts owed. Okay. Super, super important. It cannot be over 50%. Or your credit score is going to plummet super fast, okay? We recommend that you keep your credit utilization at 30% or below, okay? So you want to make every effort to never use more than 30% of your available credit. So this is where, okay, a couple of things, right? This is where if you're always just making your minimum payments, right, to keep that payment history healthy and your interest is going up and your, fees and all that is going up and your total amount of debt that you're carrying goes up, you're going to run afoul of the credit utilization limits. And that's becomes a huge problem very quickly. And it affects your credit score very quickly and very substantially, right? I mean, the payment history is 35%, but the amounts owed or utilization rate is 30%. So it's not that much different. And, people lose sight of that because they don't know how important it is. And I have people tell me all the time, as a bankruptcy attorney, oh, I'm never going to open another credit card again in my life because I can't go through this again. Well, that's, for some people, that's essential. Some people really have a problem not using all the credit that they're offered. But if you can just learn this concept and, be careful to always abide by it, you're going to build an extremely healthy credit score very quickly. I mean, you're looking at like an investment of just a few months. And we'll get into that a little bit more too. But the fact is, if you have 3 credit cards that each have a $10,000 limit and you're using a total of, let's say $9,000, $3,000 on each of those credit cards, your credit utilization rate is very healthy and your score is going to be a lot higher than if you just have one credit card with a limit of $10,000 and you're using 9,000 of that. So just bear in mind that math, okay? Because it's a really important factor. Okay, your credit history, new credit, and credit mix. they're things that, most of the time people don't have that much trouble with. A lot of people, know that, they want to keep their older accounts open and healthy, and people all the time. And I don't know why this is something that people are so aware of, but whatever. It's actually something that people say to me very, very often when we're talking about filing bankruptcy. The truth is, when we file a bankruptcy case, all of your credit card accounts are going to get closed. Okay. And you're going to open new accounts, and you're going to rebuild and make them healthy by watching your payment history and your credit utilization and these other factors, right? This length of credit history is only 15% of your score, but for some reason, it is one of the things that people are the most afraid of, losing that credit card that they've had since college. I say, let it go. Because you may very well be serving yourself much, much better by putting that that effort into building the payment history and credit utilization components. There is also some tricks to increasing the length of credit history that we're going to talk about, which I'll just say right now, because, let's focus on this. If you're really that afraid, you can also talk about, as you're building up your credit, especially like if you did have to file a bankruptcy to wipe out a lot of old bad debt, and you lose those older credit cards, you can talk to a family member who has, a 40-year credit history. Maybe mom or dad are retired, but they've had a credit card that they've had for 40 years and it's in good standing. They can make you an authorized user. And then guess what? Boom. Just with that, your length of credit history has jumped exponentially, because now you have their credit history as on that length of credit history component. Now, of course, you have to be very careful, because now your payment history and your credit utilization, to an extent, just with respect to that one account, but to an extent, it is going to affect that other person too. So, we want to be careful if we're using somebody else's credit history to build our own credit score, that we are very respectful of, using that properly and, judiciously, and being careful. Okay. So then there's, new credit. That's, how often you apply for and open new accounts. Makes up 10% of your score. And, we all know we don't want to be applying for new credit cards left and right. We want to pick and choose carefully, but it's only 10% of your score. And, sometimes opening a bunch of new accounts can actually be a good thing for you. So we'll talk a little bit more about that too. Then there's your credit mix, right? You want to have more than just credit cards, more than just medical bills. You want to have some installment loans, some mortgage loans, whether a car lease or an automobile financing agreement. The mix is good. Just like you want diversity in your investment portfolio, you want diversity in your credit report portfolio.
Yeah, Karina, there's one question maybe that's relevant right now.
Okay.
Alexandra says, sounds like business credit is based on personal credit. Even if we have a new tax ID, is it still based on personal credit?
No, I'm going to get to that. The reason that I'm talking about personal credit first is because, when you are just opening your business, a lot of times you're going to need initial extensions of credit that, maybe your business is not eligible for yet. And I think for all of us, just, functioning in today's world, we need to make the effort to have a healthy personal credit score. So it's, they're actually two separate things. But I like to talk about the personal credit score first, because I think it comes first. But the business credit is not dependent upon the personal credit. So I hope that helps. So you're, just so that we're clear on different types of loans and things like that. Also because, these factors are all relevant on your business credit score as well, right? So these are all things that you have to know when you're looking at building your business credit. So installment loans are loans that carry a balance that is repaid over time, and they have a fixed number of payments: your mortgage payments, your automobile payments, federal and private student loans. Okay. An installment loan is they are all treated the same way when you're calculating your credit score, but they're treated very differently from revolving accounts. The revolving accounts are credit cards, lines of credit, things like that, that have varying balance and monthly amounts due. Okay. And they're the ones that, really are the ones that consistently affect your credit score more than anything else. They particularly affect that credit utilization rate. Just a quick note, because a lot
Karina?
of people ask me, yeah.
Oh, I'm sorry. Just back to the other, Terry's asking about rent versus a mortgage. Does a rent payment impact your personal credit? If you pay rent instead of a mortgage, how do those two relate?
So rent is an installment agreement, just like a mortgage. And it does definitely impact your credit score, but it impacts it on the installment loan side, not on the revolving credit side. So it actually affects your credit score the same, well, not the same, but in a very similar way to a mortgage payment. In the income factor, I'm just going to touch on this real quick and then jump, which is people often think that how much income they have affects their credit, and it doesn't at all. You could actually make no money at all. You could be, already out of, you could be out of work and have run out of unemployment. Okay. And you can still build your credit score to that 720 or above. So income is not taken into account. The only, thing is, when you're going to actually use your credit score to obtain lending, the lender is going to look at your income, right? Because then there's your income to debt ratio comes into effect and all these other things. That's not what we're talking about today. We're not talking about how to use your credit score. We're talking about how to get it healthy. Okay. Your income to debt ratio, just so you understand what that is and why it is important when you go to get credit. Couple of things to keep in mind. Just when you're looking at getting a loan, most lenders, especially for bigger items like mortgages, large lines of credit, if you're getting a line of credit for opening a business that requires construction or something like that, they're going to look ideally for an income to debt ratio of 28% or less. And so here again, this, that credit utilization component, it's so important, right? Because if you can keep that at below 30%, you're pretty much, getting yourself situated not only for a healthy credit score, but also for access to better lending with better terms, better, limits and all of those things. Okay. So perfecting personal credit, we want to, just look at, and we're going to talk about this more when we get into the business side. We're going to talk about, some tricks on deleting bad information, adding good information. And we're going to talk about, practicing some really important tips or strategies to making your credit score increase up to 100 points in just 2 to 3 months. That's for real. Okay. I'm telling you, again, as a bankruptcy attorney, I see the skepticism on this. I hear it all the time from my clients. And I will tell you when I do, for example, a Chapter 7 bankruptcy case, takes between 100 and 120 days for the total case to run. Okay. At the from 6 months after we file a bankruptcy case for someone, I will then sit down with them for what we call an exit meeting. And I will show them that what I was telling them was true. And this is how I do it. Okay. Not only are they feeling the relief of not having their debt anymore. Okay. But before we file a bankruptcy case, we pull their comprehensive credit report. When I do that exit meeting 6 months later, I will pull a new comprehensive credit report. And at that exit meeting, I will show them that, by doing the things that we have told them, they have increased their credit score. I will tell you at least 95% of the time when I am showing them side by side those two comprehensive credit reports, their credit score is better after their bankruptcy case and just starting with practicing some of the tips that we have given them than it was before we filed their case. So what are those key strategies that we want to really just focus on initially? Well, the first thing that we want to do is we want to pay our bills on time. And by on time, I mean before the end of the month. So here's the way that works. And it's not intuitive. It's just the way the industry works. So you have to know it, right? The statement is generated with a statement date. So the closing date on the statement is the statement date, right? So it's February 10th is the last transaction. That's the closing date. That's when the statement is issued, but it's due by the 7th of the following month. Okay. You don't want to go by the due by date. Okay. It's probably not going to make any difference to you if you pay it by the 30th or the last date of the current month, or if you pay it by the 5th of the following month. And I was always I was taught, hold on to your money as long as possible. Don't give it to the other guy for him to make interest on it, right? So I would always pay like 2 days before it was due. And I was never late, but when I just switched that after I learned this strategy, my credit score actually went up. And I couldn't believe it because I already had a really good credit score. And just this little adjustment of instead of paying by the due date, paying before the close of the prior month, my credit score went up. Now, why is that? It's very simple, actually. The credit report, credit reporting is sent to the bureaus at the end of the month. So your closing balance, right, gives you this higher number. If you pay your bill before they send the information to the credit bureaus, then your amount due will be lower, and that increases your credit utilization. It's that simple. Okay. So one other tip, if you are a renter, for example, well, that's a really important thing to consider. Not all tenants have the benefit of automatic reporting. Usually, when you have a mortgage, you can count on the mortgage company reporting. Not all landlords do. You can, these are just two websites that I have used, that I have, helped clients use. They are, self-help techniques that can help you improve your credit score. You can check them out, use them if they're helpful to you. Just know they're there. If you're a renter, please make sure that your landlord is not put off by the request to help you. All that's going to take from the landlord is somebody's going to call them once a month and say, hey, did so-and-so pay their bill on time? If the landlord is not on board with taking that call and just reporting for you that way, then don't set it up, because if the landlord doesn't take the call and doesn't verify, then it's going to actually work against you. So it's great if you have a cooperative landlord. It really can help a lot. But if your landlord is not a nice person, don't use that tactic. Use one of the others. Okay, so now we're going to talk about disputing bad information on your credit report. What is bad information? Bad information on your credit report is inaccurate, incomplete, or accurate, but improperly or not at all verified information. All of those qualify and can be removed from your credit report. Disputed bad information on your credit report is done in several different ways. First of all, I want to tell you everything online, if you go to look at, how do I dispute an incorrect entry on my credit report. They're going to send you to, do it online. It's so easy, and, get results fast, blah, blah, blah. The online processes are controlled by specific algorithms that are actually geared toward denying your dispute. So you want to avoid them, right? Because you're sort of setting yourself up for failure. So you can pick up the phone and you can call the credit bureaus to dispute simple things. They will, if you have an incorrect or excessive addresses, like you don't want to have, your 10 past addresses on there, right? You just need like your most recent in the past 2 years is all that's really relevant. So you can actually have them take off that incorrect or excessive information just with a phone call. Addresses, names that are incorrect, phone numbers, employment history, and any other generally superfluous information. Now, when it gets to actually disputing a debt, that has to be done with a little bit more delicacy. Improving your credit score by disputing bad debts is a really good technique. But it has to be done, with a certain amount of finesse. A lot of the books out there will tell you to write, these very, strong lawyerly letters with a lot of legalese. You don't want to do that when you're disputing to the credit bureaus. You want to actually send a letter that you're writing to a person who is not a lawyer, because that is who's sitting at the desk that's going to read it. And these guys get, I think, upwards of like 25 to 30,000 letters a day that human beings that are not lawyers have to go through and make a decision about if those disputes are colorable or not, and if they're going to remove that debt or not. So you want to write it to a person. I prefer to do a handwritten letter, and I prefer to do on cardstock. I'll even do it on actual, like a little, thank you card or something like that, because that gets through the system. It's too much to go into today, but actually, if you do just like a regular piece of copy paper in a regular business size envelope, that gets sorted into the computer program. And then the computer's going to read it, especially if it's typewritten. The computer can't read handwritten. So by handwriting and putting it on cardstock, you're almost guaranteeing that it's going to go to a person. And when it goes to a person, it's a lot better for you, because a person has discretion. A person has empathy and sympathy. A person can actually, take into account what's going on in your life and why you're disputing this. Otherwise, it just gets like coded numerically. Anyway. So it's an important trick to know. Now, what about if the dispute arises out of identity theft, or even a judgment that's on your credit that should not be there anymore, or that's sitting on the dockets that shouldn't be there anymore? You can go to the FTC's website, identitytheft.gov, and you can fill out the identity theft form and affidavit. When you do this, you're going to have to complete the form, get it notarized, then take it to the police department. And then you send that notarized form with the police report via certified or express mail to the credit reporting agency with the handwritten letter on cardstock to make sure it gets to a person so that it's really considered. Okay. And if you do that, that bad information is by law required to be removed from your credit report within 4 days. If you don't go through this process, which I know it sounds kind of burdensome, but the credit bureaus will have a 30-day minimum investigation period, and then they're still not going to actually be required to remove it. So if you have things that are on there that are, you believe are fraudulent, or may have been, identity theft is the buzzword. That's where it is on the FTC's website, but it works for anything. If somebody misused your information to get credit and you want it off, this is the go-to method. So there's, this is just kind of bullet points of what we talked about. And I'm already running out of time, so I'm going to let you guys read that yourselves. You will get these. It's just a review. Okay, so back to the beginning. Why do you need business credit? Okay, and establishing business credit. Well, here's the thing. You're doing all that stuff to build your credit score, right? And again, remember, in response to, I believe, Alexandra's question, you need to do all of those things to keep your business credit score healthy as well. So that's why I put that as a foundation, right? Because it doesn't matter if it's your personal credit score or your business credit score. You have to do all those things to keep it healthy, and to have access to as much credit as possible at the best rates possible. Now, here's the thing. Why do you want to establish business credit? You want to establish business credit because you will get more than 10 times the access to credit through your business as you can get through your personal credit. Okay, so just think about that, right? I mean, if you could get a $10,000 credit limit for yourself individually under your Social Security number, a line of credit that the bank will give to your business if you do these things will be 10 times that. Okay, so how much more can you do to grow your business with that? And only 3% of businesses in the United States are actually utilizing these strategies to get the credit that they should be entitled to. And again, the whole thing is building the business credit helps you get credit without a personal guarantee. So how do we build business credit? Now, first of all, you have to make sure that you open a business, okay? A sole proprietorship does not count. Just doing a DBA and reporting on a 1099 does not count. You have to go and you have to do a business formation. It can be an LLC, it can be an S Corp, it can be a PC. That's all fine, but it has to have an EIN, okay? And then now, just in terms of lendable names, that's just sort of like a trick of the trade, right? You want to have the name of your business be something that that draws the banks to making credit decisions in your favor. Okay. And I know that doesn't seem like it should matter, but when they put their algorithms in, it is a factor. So when you open your business using a term like, management or company, or even just the word business in the name of your business actually helps a lot. So you can always use a DBA. Like actually Lucid Law Debt Relief Attorneys, that's my DBA. That's not the name of my company. So you go to that, you open your separate business entity, not a sole proprietorship. Okay. And you want to register that information. And this is another really important point. When you're opening your business, as soon as you open that business, you're going to need to register it with the state and with, the federal government. So you're going to get your EIN, opening and registering that business. And then what you need to do is make sure that when you register with the state, you use the same exact information. And again, when they are looking up the business to make credit decisions, that's having the exact same information on both the state and federal registration actually is going to make a big difference, because it's either going to come up or it's not, right? So you're going to have two completely separate branches, which dilutes your access to credit if they're not spelled exactly the same and using the same wording. So in the example, right, road is not the same as RD, suite, SUITE, or STE, either is fine, but pick one and use it consistently. You also, I do recommend either hiring an attorney to help you establish a business. And I know that SCORE has phenomenal mentors. I think that's probably the best resource. But you can also go online and use an online service. There are some that, are perfectly good for this kind of thing. I have a couple examples there. So then building your business credibility. Number one is your business. And I know these all seem like little crazy details, but they're actually really important in establishing your business presence And the faster they can find your business and the more information they can get on your business, the better they are going to be about extending credit to the business. Okay. And that's what we want. So you want to get a landline. A lot of people today are just using their cell phone because they want to be accessible to their clients. Their cell phone is easier for them. It's what they use regularly. It's fine. That's fine. But get a landline for the business. Pay the extra fee to Optimum or Verizon. It's worth it in the long run. And then when you open that landline, some of the companies that do that will actually put you on the National 411 registry. Some will not. So you want to go to listyourself.net to make sure that your business phone number is on the National 411 registry. It's also really good to get a vanity URL, like go to GoDaddy to get your website URL that has the business name in the URL, and to get an 800 number. So there's a resource there for you as well on how to set those things up. And again, when you register your business and your licenses with the state, make sure you're consistent with the information that's on your EIN. This businessnj.gov has some information to help you with registering your business with the state. Okay, now, the next thing you want to do is you want to make sure that you open the proper kinds of accounts. So you want to open a merchant account to process and accept credit card payments, even if you don't use it. Just having that ability, again, it makes you look more creditworthy. It makes you look more legitimate. Even if you don't need it and you only take checks and cash, when a bank is looking at your business to see whether or not they're going to extend credit to your business, this is one of the things they look for. So have it. It doesn't hurt. Then you're going to open your business bank accounts. I cannot tell you how often I deal with people who run everything through one account. You cannot commingle your business and personal funds if you're going to get, good credit for your business. Okay. So you want to make sure you have separate business bank accounts. You also want to make sure that you are paying yourself a salary as an owner. And that salary, if you're an S Corp, will be through a W-2. If you are an LLC, it will be through owner's draws. Either way, the company needs to be paying you from the operating account for the business to a personal account on a regular basis. Why? Because that, not only keeps your business healthy for real, right? Because your business would have to be able to pay somebody else to do your job. So you can't not get paid, and the lending institutions, when they're looking at extending credit to your business, they want to see that your business can consistently pay your salaries. It's a big factor. So your operating account exists for the day-to-day business income and expenses. Some people have a belief in a separate account for employees for wages. I don't think that's really essential. I know that in the credit score side of things, it's not essential. But what is essential, I think, is having an operating account, a tax account, and a profit account. Okay, so your operating account is where all your income and expenses go through. Then you have a tax account. Now, if you're an LLC, you want to set aside 22% of the profits to pay your quarterly taxes and your end of year taxes from that account. If you're doing a draw for your owner's benefit, you want to, let's just say you pay yourself $10,000 a month, right? So $2,200 a month should go to the tax account, and then the other $8,800 goes to your personal account. That way you're making sure that the business is setting aside enough money to be able to pay taxes at the end of the year. Now, if you're using that well and you're keeping your profit account too, you're always going to bear in mind that, you want to think of strategies for using that money before the end of the year in ways that can, help to offset your tax liability. But this is not a tax webinar, so I'm just going to leave that there. So the other thing your business wants to do, if you're going to establish business credit, you want to be a joiner. Your business should sign up. You're going to go onto these websites. You're going to sign up. Okay. You're going to get on Dun and Bradstreet's registry. You're going to get on Equifax, Experian, and Amazon has business accounts and personal accounts. And it's really smarmy of them now. They're like charging separate fees for Prime Business versus for Prime Personal. And that's kind of, I think that's awful. But it is something that having a separate business account that you use regularly and that gives you additional extensions to credit through companies like Amazon will actually help to build your business credit. And so you want to do that if that's something that you can do. Using these strategies to establish your business and create a business credit profile will actually put you in a position to be able to get business credit without a personal guarantee, sometimes in as little as 4 to 6 months. You'll actually get credit card offers to the business that do not require your Social Security. Just bear in mind, big exclamation points, big red letters. If the application asks for your Social Security number, then they are asking for a personal guarantee. So that is not what you want, okay? The goal is for the business to be credit eligible without you. Now, again, at the beginning of the life of the business, you may just have to, have business, lending that has a personal guarantee. But if you're doing these things to really establish the business profile and get business credit, like I said, you could, in as little as 4 to 6 months, start getting offers for credit directly to the business without requiring personal guarantees. Okay. I was supposed to be done by 10:45. It's 10:50. I'm going to tell you right now, there's a lot more ground to cover. Okay. I know I went quickly. The slides are for your reference. My contact information is in the back of the presentation. So if you want to dive a little bit more deeply, if you have additional questions after today, please feel free to email or call me. Do we have any questions to go over now? I think I can pop into the Q&A bubble.
Yeah, Terry had a question about what if you enroll in automatic payments and the pay date is set by the creditor and they use the due by date for payment. I think he's referring to the pay it by the end of the month.
Yeah, I get it. That's fine. But that's not the best. So, my opinion is don't enroll in the automatic payments. You can schedule payments through your bank's online payment portal, and have them go out regularly. But if you are abiding by the rules of the credit card company, bear in mind, it's not in their best interest for your credit to be super healthy. That's not their goal. That's your goal. So you may have to work a little harder and not have the automatic payments set by the creditor. But on the other hand, it's not the end of the world if you're keeping your payment history healthy. It will upset your credit utilization rate a little bit, but it's not going to, be extremely harmful. But again, it's making it so that you can't get the absolute best out of your credit score.
It may also be how many you have. I mean, maybe if you have 8 different accounts and only one of them isn't paid by the end of the month or something, that might.
Yeah, that's a great point. That's absolutely a fantastic point. If you have 8 credit cards and only one of them is getting paid after the 30th, then obviously your credit utilization is still going to look good. but, again, that's a judgment call. It's, a business decision on your part. And you can pay them all before the end of the month. If that's possible, if that's available to you, that's going to be better. That's all. Okay. We have, let's see, another question from Dante. What would a healthy business credit look like? Right now, I'm home-based, not sure at what point I will have a business location. Do you recommend having a landline now or wait so I don't need to change business number? Okay, you won't need to change your number anyway. It can travel with you, especially in today's world. I have changed the location of my business 3 times since its inception. I still have the same phone number. So I would say get the landline for the business now. And a healthy business credit looks, it looks very similar to your healthy personal credit, right? It's the same algorithms basically being applied. So, you want to have like a 720 or above for your business. It's just a separate credit report. If you actually, Dante, if you want to reach out to me offline, I can show you what a business credit report looks like. But it's basically all the same. That's why I started out going so deeply into the personal credit score, because the business credit score is basically it has very similar components, and it's going to look almost the same as your personal credit score, your personal credit report. I hope that makes sense, and I hope that helps.
Alexandra had a question above. Is there a difference between using an EIN number and a DUNS number? And how can you fix or increase income on either?
Yeah, so you really I would say this, but you need there is a difference. You want to have the EIN because that registration with the federal government is the first thing that they actually look at for lending. If you don't already have one, you can get one. You also, bear in mind, you can have multiple businesses, right? So you may have your existing business that you actually operate on or under, right? And you can open up a separate business and establish it with all of these components to build credit. And you can, that's how a lot of people really make money. And that's why, they have multiple businesses when really looking at the grand scheme of things. It seems like it's a lot to manage, but it's really the best way to grow your business credit. So I would say if you don't have an EIN, you should go ahead and open one and make sure that it's consistent with what you have in other places already on your DUNS or wherever else that you are already registered.
What's the difference between an EIN and a DUNS number?
So, I have to tell you, I don't really use the DUNS reporting. So that's more complex corporate than I get into. I deal with small businesses. So I don't really use that. And I'd rather not get into an explanation on something that I honestly don't have a good grasp on. The things that we really deal with, somebody in the chat had a question about the DBA and an EIN. He said they put the name as their personal first and last name. Is there a way to change the name into a business name instead? Yeah. So again, that goes back to the same thing, just, opening a new business entity with the better lending name to build the business credit that way. And, full disclosure, I actually had to do that myself because when I opened my business, I did the same thing. My EIN was opened under my name because I'm a lawyer, and we have restrictions where we have to use our name in the business. In New Jersey, you're not allowed to just use a fun name like, bankruptcylaw.com. So I had to be something with my last name, Lucid. So I just made it Karina Lucid, right? But you have to think about ways to change that if you're going to build your business credit, and you can just open a new EIN and build from there. And somebody else, Victor, asked about what about paying the entire balance every month? Paying the entire balance every month is great. And especially if you can pay it before the end of the month, then your credit utilization rate is going to be fantastic. I mean, it could be, right, your credit utilization rate at that point could be, as low as, 1%. And then, that's phenomenal. So if you have the ability to do that, definitely, that's great. It's a great strategy. Let's see. And I think we have one other question. And we are.
Yeah. Alexander wanted to know about this, this being recorded. Yes, this is being recorded, and it will be at our website. So you can go to to centraljersey.score.org and give us a couple of days to get it up. I'm putting that in the chat, and you can get the webinar there. And we will be sending Karina's slides out to you as well. I think that's it. I think we're at our time. You did well.
Oh, we did it right on the button. It's 10:59.
A lot of information into a short period of time. But I think this is an excellent presentation on how to think about credit and how to get going. So again, we thank you very much for giving your time and your information. Karina's contact information is on the slide. So she's happy to answer some questions, I believe. And go forth and build your credit.
Yeah. Thank you so much for attending, everyone. It was really sincerely my pleasure. And I look forward to whatever I can do to be helpful, working with any of you in the future, whether it's, through providing you assistance or, even just getting to know each other and having a one-on-one. I mean, credit score aside, one of the most important things to building a business is your network. So I'd love to meet any of you, have coffee, chat. I'm sure that there's a lot more beyond the credit score that we would be able to share with each other. Thank you.
Thank you. Thank you, Karina. And thanks everyone for attending. We'll look forward to seeing you in March at our upcoming webinar, topic TBD. Bye-bye.
Awesome. Thanks so much.
Thank you.